Hello there, welcome along. This is Business Connections Live. It is program number 56. Great to have your company as always, and a really fascinating guest for us this evening. My guest tonight is Tony Pinn. He's the COO, Chief Operating Officer of Crossflow Payments, and tonight we're going to be talking about supply chain financing services through peer-to-peer lending as an alternative source of finance to businesses wishing to improve cash flows and strengthen supplier-buyer relationships. Got that? What does it mean to your business? If you're looking for an alternative way to fund your business, if you're looking for an alternative way to make certain that the funding is coming into your business, then you need to be talking to somebody like Tony Pinn. Tony, it's lovely to have you with us. Thank you very much for joining us on Business Connections Live. Let's kick off. Let's just find out a little bit about you and also a little bit about cash flow as well. Tell us Crossflow. Tell us a little bit more about Crossflow. Fundamentally, what is the business, Crossflow? If you're going out there and you're talking to your mates down the pub and they say to you, I hear that you're doing quite well, thank you very much indeed. And you say, so they say, what do you do? How would you explain it to them?
Well, I think our principal aim is to fill a gap, a need that exists today in the marketplace to provide finance to small businesses. We hear a lot in the market about the lack of lending, particularly from the main banks these days. And we're looking to come in and help fill that gap by providing finance. And we do that off the back of a technology base. So we've built a modern technology environment that will allow us to get in between the buyers and suppliers that operate in the market.
So how does what you do then differ to what the services that the banks offer, or not in that particular case? But I mean, businesses are crying out for finance at the moment. They're crying out for some vehicle actually to finance their business. Cash flow is all important. We both know that get the cash flow wrong in the business and it can be a business killer. So how does what you do differ from what the banks are offering?
In some ways it's the same. We're meeting the same need. I think what we're seeing is as the economy starts to improve, that suppliers to larger businesses are seeing their order books grow. But what that really means is that they're going to need more cash. It's about cash flow. And traditionally they would have gone probably to the bank first and said, can I have a loan or can I have an overdraft in order to provide that cash flow to enable me to meet those orders, my increasing order book that's coming in. But the banks, as we know at the moment, are struggling to meet that need for all sorts of reasons.
I mean, legislation and things like that, isn't it, that have come in. And banks are being overly cautious at the moment. Now, I can't believe that you too aren't overly cautious too. But is it just different in the way that you source your funding and the ramifications on from the way you source your funding that allows you a little bit more freedom than the more traditional ways of getting the funding for your business?
You're absolutely right. It's we source our funding from a broader range of funding providers. In our case, we're looking at investment funds, hedge funds, pension funds maybe. These are sources of locked in large amounts of capital. They are looking for opportunities to use that capital to, yes, achieve a return, but also in a way that's relatively safe compared to maybe other forms of investment that they could undertake, but also that supports the economy generally. And we're finding a huge amount of locked up potential there that we can help release into the marketplace to start filling that gap.
Well, you refer to it as peer-to-peer, don't you? So, you know, our peers are lending companies that are equal or the same to them the finances to actually move forward. Let's look at a typical example of what you offer. And I know that this is very difficult. This truly is the how long is a piece of string question, isn't it? I mean, what do you do? But I know it's very broad, but you do something that is similar to factoring but isn't. So I could, you know, if you're factoring out your invoices as a business, it means that you're getting the money up front. The money is coming into your business, therefore it's helping your cash flow. But what you're doing is that you're looking at it slightly differently, aren't you?
We are. In some ways, it's very similar, as you rightly say, in that we're working from invoices that are generated by suppliers that they deliver to large customers of theirs, and we're providing finance based on that opportunity that they have, or that receivable, that cash that was due to come into their business. But what's different with the way we look at it is that we're turning things around. We're saying, actually, once that invoice is received by your large customer,
Mm-hmm.
and that customer takes a look at it and says, well, it matches what I ordered.
So it matches what I ordered. I've got a PO number on it.
Yeah.
The chances are I might even pay it.
More than that, I actually got the goods, they came in, and I am going to pay it, but I'm going to pay it based on typical terms, and these days those terms can be 30, 60, 90 days or more even.
Yes, indeed.
And that creates the problem. But it's based on that fact that that buyer has said, yes, we're happy to pay, and we're going to pay. And by providing that commitment, we can then use that to provide the finance, effectively accelerate the payment of that invoice to the supplier, but we rely on that commitment from the buyer. So
who's the service then actually for? Is it for the seller, or is it for the buyer? I mean, I can see that the seller is going to benefit from the service that you provide. So who are you talking to? For instance, say you've got a multi-million-pound conglomerate out there, and there are a lot of small SMEs who supply large organisations like that, and even, a small SME is relying on there being a 30, 60-day payment terms, and the large multi-million-pound conglomerate may be turning around and going, well, it's going to be 60, 90, God forbid, even 120 days. And because, as a business, you're so anxious to retain the business of that large conglomerate, you'll put up with that. So who do you approach? Do you go to the seller and say, well, what we can do is that we can effectively help your cash flow? Or do you go to the conglomerate that says, and you say to them, well, what you can do is that you can support your suppliers by integrating our system into it?
well, the latter would be where we start.
Right.
So we go to the large organisation, and those organisations remain very reliant on their suppliers, however small they might be. So they are, in effect, critical to the continuing business of that large conglomerate. Mm-hmm. We've talked to large organisations that have said to us, we have certain suppliers, and they might not be big suppliers, but they're absolutely critical. If they went under, if they failed, that would maybe mean that we cannot continue production of whatever it is we produce for a period until we can replace them. And we've even heard of situations where large organisations are building up stocks of whatever it is that particular vulnerable supplier may supply, because they're concerned that they might not be there at some point in the future. Now, by them introducing an opportunity to that supplier to attain finance through something like the Crossflow Payment service, they can not only support the continued viability of that supplier, but they can then look and say, well, actually, we need not now continue to hold quite so much stock. So they can release capital in their own business. So what we're looking to do ultimately is create benefits on both sides. The way I look at this often is I talk about a tug of war between buyers and suppliers, and businesses like that is like a tug of war where everyone's trying to win.
Everyone's doing a dance, aren't they? Everybody's doing a dance around each other, aren't they?
Absolutely. And what I'm trying to do is introduce maybe a slightly more elastic rope into that tug of war so that we can have winners on both sides. And that's what we as a business are trying to do. As I said, we're filling a gap. It's not that this is anything new, but there is a demand out there in the marketplace today.
Why do you think we've got this great big black hole when it comes to finances for SMEs? I know we were talking before we came on air that, yes, we're coming out of recession. Some companies and some businesses aren't feeling that they're coming out of recession. Some businesses are. You do see orders are picking up in some areas. In some other areas, it's relatively still flat. But what we have seen are the banks are just, even though, and it's difficult to say this because you've got to be careful. The banks, to a certain extent, the general consensus of opinion is they got us into it, and now we're being punished by the draconian rules that they are now applying in some instances to small businesses. So is it the fault of the banks, or are the banks really the people that are just getting the blame, but it's not really their fault? Now, you're an ex-banker, I know that, so you're allowed to stand up for them, I know that.
And the banks, I think, to an extent, do get a bad press on this. There is clearly some element of blame on what the banks were doing, but a lot of what the banks were doing in order to get the global economy into the state it got into 5-6 years ago, was so far removed from lending to SMEs that it might as well have been a different business. So they do get a bad press. I think I've seen 2 or 3 economic cycles now in my career, and in every case, the banks have always delayed the return to the market, if you like, after the recession.
So do you think then that what we'll see in a couple of years' time, will we ever get back to where we were pre-crash, do you think?
I think we're entering into a new world where the banks have a very, very valid place, and they have an important role to play. What we're trying to do is not to replace the banks. We're trying to support and extend the marketplace to an extent. And I think it's not about getting back to where we were, it's about looking at what does the new world look like in terms of supporting the economy. And that new world is about the banks alongside alternative forms of finance, because it's recognising that there's huge amounts of cash out in the economy that can be used, can be released in the way that we're doing, but it's not sitting with banks in that sense.
Well, we're going to talk a little bit more about where the money actually comes from, and we kind of touched on it for a moment there where we were talking about peer-to-peer, but we'll talk a little bit more about that. But I suppose, in a nutshell, it's not, or is part of it coming from the banks, or is the conventional banks, the banks that we would, the high street banks, the names that we know, is the money coming from there, or is it coming from alternative sources?
Generally, through what we do, no, it's not coming from the high street banks. As I said, our aim is to extend beyond what they're doing. Yes, we do have some banks providing finance, but they tend to be small banks, maybe foreign banks, who are interested in using what capital they have in the UK market because they see a very positive outlook in the UK economy.
Well, I'll tell you what we'll do. We'll come back to that in just a few moments' time. We'll talk a little bit more about where the actual money does come from. We'll explain a little bit more about peer-to-peer. It's an interesting concept, actually, and not to be confused with crowdfunding, and I'm sure that will all be explained from Tony as we take us through the hour. Also, we're going to be talking about what SMEs should be looking for when it comes to the terms. You can't enter into something like this. We are talking in some instances about huge amounts of money. So what are the terms? What's the catch? And we'll find out a little bit more. If you do want to find out more about Tony and the rest of the business as well, you can go to their website. The website is Crossflow Payments, and you can see there. Look at it. Now, there's a number in the top corner on your website there. Like I see, it says 1.3 million pounds sitting there on the actual site. What's that? Is that the amount of money that you've put into businesses at the moment?
I think that's 1.3 billion.
There we go.
Actually.
You can see the site there. It's that figure there in the top corner.
Yeah, 1.3 billion pounds.
Oh, billion! It's billion, isn't it? It's not 1.3 billion.
Yeah.
£1 billion, ladies and gentlemen. That is quite amazing.
But that's the value of business that we've got going through our platform. We don't finance all of it because not all of that transactional flow needs financing, and that's a great thing that we offer that optionality, which we can talk more about.
All right, well, listen, we'll find out more about that as the evening progresses. Tell you what we'll do right now, we'll look back at what happened on last week's programme. We had Andrew Weaver from LawyerFair. He came in and he was talking about deregulation and the way that legal services are now bought and supplied to SMEs. If you've ever found yourself in a situation, we're lucky here. We've got our own friendly, I use the term in inverted commas, our own friendly lawyer stroke barrister who looks after our legal. I'm going to get hit for that. I can promise you that after the programme. But the thing that's important is that it's all very well within a business where you're going forward, you're looking for the business, you're setting up the sales, you're supplying the product. But there are times you're going to be caught out when it comes to the legalese that small to medium scale enterprises actually need. Everything from contracts all the way through to, leasing loans and things like that. You need someone that you can actually talk to. And of course, I would imagine when you're talking about raising money as well, you need someone to be looking at the T's and C's of what you're getting into as well. So where do you go for that legal advice? Who do you talk to? And they often say it's a bit like when you get a lawyer, it's a bit like when you get maybe an accountant. You don't know how good your accountant is until you get the next one. And it is very much that. You don't know how good your legal advice is until you start chatting maybe to another one. Well, LawyerFair is a service that really is quite exceptional. It gives you the opportunity to go out there to a panel of lawyers and find a lawyer that is got the skills and is specific to the needs that you need, and then you start dealing directly through them. It's a bit like, findmealawyer.com, but it's called LawyerFair. Have a look at this. You'll find out more from Andrew Weaver on last week's edition of Business Connections Live. Legal services for business, the future of legal services for business, how the whole landscape there is changing at the moment. My guest tonight is Andrew Weaver from LawyerFair.
LawyerFair essentially helps business owners to find the right lawyer at the best price. That's essentially what we do. We're a legal comparison and procurement service. The Legal Services Board last year did a survey that indicated, I think, over 9,000 businesses. So it was a fairly scientific study. And it found out that 7 out of 8, which is a remarkable figure, 7 out of 8 SMEs felt they didn't get value from legal services. So a majority of business owners actually preferred to muddle through rather than seek external legal help. There is no doubt that the market has become much more competitive, and it doesn't matter how big or small you are, you want your legal fees bill to be as competitive as possible. The ability now for the business owner to find good quality, cost-effective legal advice it's transformed from where it was even 3 or 4 years ago. So what we do is we get an instruction come in from a business owner. They require, let's say it's a commercial lease, renewal or an assignment of a lease, and we will match them with pre-approved expert lawyers. So we try to qualify lawyers on the basis of what's their attitude and approach to fees. Are they prepared to do fixed or at least indicative fees and stick to them? But the value of a lawyer as a business owner is actually equally important. Is there evidence of the value? Is there a way of understanding whether that lawyer who's more expensive is actually going to deliver a longer term, better impact for you? So part of our criteria is we build up our panel of lawyers from the bottom up. We are handpicking and selecting them based on that value add. And the way that we qualify that is that we look at their market reputation, what their reputation is amongst their peers, perhaps amongst the Legal 500 and various other directories. We also ask them for 2 or 3 testimonials that we then will speak to. We're not interested in them just giving us a couple of quotes from their website. We want to speak to 1 or 2 of their clients. So we do some due diligence that is of a level that makes us confident that they are the right quality of lawyer, because clearly their service and their delivery has a major impact on our brand development. We are very much about the individual lawyer, so we're not about the firm. It's a crucial key difference with us. Although the firm clearly is part of the deal of them coming on board, lawyers change and move, and we are...
So it's the individual then?
It's the individual. You're instructing the person who's doing the work, not the firm. If you go to a general site, you may well put in that you want X, Y, and Z done, or you want advice on X, Y, and Z, and you may get back a flood of well-priced offers. What we try and have is lawyers on the panel who are willing to give a little bit away for free. Well, we can cater for anything. We can find, we are growing the panel all the time, so the expertise that we have, but we can also go out and source the lawyer that you need. So the US visa employment issue that I mentioned, we had a client, a business owner, who had a problem with a Chilean supplier, which was quite an interesting one.
That's going to be difficult.
That was quite a tricky one. We actually ended up going to a lawyer who had a Chilean background. So we can actually go out and bespoke find these, but the general types of work that we deal with, three categories primarily: contracts and agreements, general types of issues ranging from T&Cs to distribution agreements, etc. We do a lot of commercial property stuff. That can be everything from new leases, renewals, assignments, taking on office space, etc. We also do a little bit, because of my background in business sales, we do quite a lot of M&A stuff, quite a lot of buying and selling of businesses. So those are kind of the three key pillars at the moment of the work. Andrew Weaver, LawyerFair. There are many reasons why, as a business owner, you can now control the way that you find and select and review lawyers. LawyerFair is just one small part of the changes that are taking place. Certainly from our perspective, we provide you with choice of real experts. This isn't a firm that just happens to do a little bit of IP. This is about us helping you find people who've done exactly the IP that you require, and those lawyers then compete for that work, and you're able to see not only the price that they can provide, but also the value that they can offer based on their own expertise. But there are lots of other services out there. There are online services where you can do fixed fee legal documentation. It's crucial that you get the legal documentation and you get a competitive price for whatever you're doing, and we are just one of many options that are there that weren't there perhaps 5 or 10 years ago for you as a business owner.
Andrew Weaver there from LawyerFair. A fascinating insight. If you haven't watched the program yet, please do go to our YouTube channel or to the website as well at businessconnectionslive.com and check it out there. A really good night, actually. By the way, can I just say hello to everybody that we met? We were told off last week for not mentioning some of the people. Well, we were up in Wolverhampton at the Business Networking Show. We were up there for a day. Must be, a couple of weeks ago now. We didn't mention it last week. Can we just say hi to everybody that we did meet up there? Absolute pleasure meeting you, and fantastic to see all these small businesses actually growing. And we've got some exciting news during this program about another event that we're going to be going to very shortly that's a little bit bigger than the one in Wolverhampton, not a lot. And it's in London, and we're going to be there. And so are 29,000 other people as well, and we're going to be broadcasting the program live. Now, can you guess where it's going to be? I'll tell you in just a moment. My guest this evening is Tony Pinn. He's the COO of Crossflow Payments, and tonight we're talking about supply chain financing services. Really what we're talking about is how to find alternative financing for your business. That really is the key to what this is all about. We go through it and we sometimes think to ourselves, how are we going to get paid for the goods? If you're a large multinational, how are they going to pay you? Is it a service that they can provide to you? Is the large multinational going to be able to help you? Are they going to get the cash to you when you need it in your cash flow? You as an SME, who do you go to? Who do you talk to? What kind of services are out there when it comes to helping you finance your business, when it comes to anything from buying goods all the way through? Let's talk about that initially. We'll, it's this need for financing in SMEs. Who is it that you think you're targeting?
Well, ultimately, it's any business of any size who has a need to finance what they're doing. Every business will need funding at some point in their life cycle. We've seen in the press the banks have said that no, in fact, the SME market is awash with cash, and there isn't really a need for funding. I think if that's true now, it won't be true in the future. Every business at some stage will need funding. So our service will support any business that is in need of cash flow at some stage. The great thing about what we offer is the flexibility for those businesses to say when they want the cash flow.
Is it all aspects of it? Excuse me a second. Is it all aspects, or is it this kind of factoring thing, this invoice thing with the cash flow, or could it be anything right down to leasing?
No, it's really driven, what we do is really driven from invoicing. So it's the core business, the sales activity of a business. Now that need not be goods, it could be services, anything where a customer exists that can say, we are happy to pay you at some point. And once they're happy and are providing that commitment to pay, we can provide the finance. But
So what then are the big issues? I mean, it sounds fantastic, but there must be issues, there must be pitfalls that are out there that the SME and even the large multinational has got to be aware of.
I think the key is for the SME who's looking at financing is he needs to take a step back and say, first of all, why do I need this cash? What do I need it for? Because in the same way that he can go to a bank and maybe get a loan for a fixed term, or he can get an overdraft, he can do the same in the alternative finance market. What we do at Crossflow is provide cash flow financing, so-called working capital financing. But there are other providers who might provide loan type facilities, so for a fixed term, 3-5 years, and that might be more appropriate for them.
So what makes it attractive then to come and talk to you? Is it the ongoing fees that are charged? I mean, you look at some of the banks, and yes, you'll get your interest rate, but on top of that, there are a whole number of fees surrounding the account as well that are going to be added on top of the loan. Is it that's different? Is it or is it the top line interest rate?
It's really a combination of all, and I think when you're looking at taking finance from anybody, be it a bank, be it a traditional factor or invoice discounter, or someone like ourselves, you need to look at all the costs involved. Mm-hmm. We make it very simple. We charge an interest rate. We don't charge any fees to join the service. We don't charge any fixed fees on an ongoing basis. That's why it's great for a business that needs finance maybe at certain times in the month or certain months in the year, who has a very cyclical business, but not at other times, where maybe a traditional factoring arrangement, they'd be paying fees whether or not they were borrowing money. And the overall cost to them then can be quite prohibitive. The other thing to look at, and I think it's quite important, is that many lenders will ask for security for their loans.
You're not going to tell me that you don't?
We don't ask for security.
Really?
And the reason we
Take
do...
this man's number.
The reason we don't need to do that is because we're relying on the large conglomerate, the large business, and their commitment to pay us. In fact, if we don't recover the sum from them, we have no rights under our arrangement to go back to the SME and say we'd like our money back. So this is so-called without recourse finance. So once we've paid the SME in respect of one or more invoices, that's their cash. They can walk away and they have no obligation to us at any point in the future, and that's a great peace of mind. And as I said, the fact that we're not saying, can we have a charge over the director's house or as well as the business or various other things, makes it a very attractive and very simple and easy facility to set up. And I think that's very important when you're looking at financing. How easy is it? How quickly can I get my money? And is it going to get into the business and working when I need it?
Do some people or some organisations, do they use it a bit like a carrot and stick, so that they'll promise one thing, but then what they'll do is that they'll disguise it by pushing out their payment days and whatever? I mean, can they do that with that? I mean, you have no control over the way they use the money, surely.
We can control who the money goes to and in what it relates to. But of course, if at the same time that we're offering these types of facilities to SMEs, their large customers are looking at the terms under which they do business with their suppliers, no, of course we can't impact that. And it's true that I think those sorts of reviews of terms are going on. They're going on all the time anyway. Mm-hmm. And I think the way we view that is that if we can at least help mitigate the issues that those changes create, then all much the better. We've seen many reports in the press over the past year or two, and it's always happened about certain high-profile companies who are extending payment terms, for instance, to their suppliers. Mm-hmm. And essentially it's a take it or leave it option. Well, if we can go in those circumstances and at least help to smooth the waters, then so much the better. Because
is it a difficult sell for you when you're going in and you're explaining what you're providing? Because it's nearly protecting reputations of large organisations. The fact that you're going in there and you're saying, look, here is something you can offer the people that are supplying you with the products that you've got. You can actually look like the you can look like the most generous of businesses and operations that are sitting there at the moment, simply by using the money that we've got and putting that into the system. So is that the kind of sell that you're doing when you're going and you're talking to them?
It is partly, and I think we come across a lot of large organisations who do, believe it or not, care about their suppliers. Now, part of that is self-preservation, because, as I said before, they want the suppliers to continue to be there because they may need those suppliers. But equally, I think the responsibility they have throughout the economy does actually matter to a lot of companies. And we hear a lot about sort of corporate social responsibility. And these days, if you pick up the annual report of a big FTSE name, you will always see a big section on CSR. Now, that's very important to them. And very often, our solution forms part of that CSR program. We increasingly talk to directors of companies now who have responsibility for those sorts of programs. And that's not just in this country as well. Interestingly, a lot of large corporations have suppliers globally. And we can offer our services globally. So we might talk to a company who is interested in providing finance to suppliers in developing parts of the world, in Africa maybe. So supermarkets might be sourcing coffee or other cocoa or things like this from areas, and we all see the fair trade labels and things like this. And this can often form part of that, because those suppliers, if they can get finance locally, have to pay astronomical rates of interest. And I
can see that what it's going to be doing, it's going to be affecting both the purchasers' cash flow, and it's also protecting the it's providing the cash in both parts of the operation, isn't it? Everything from the seller all the way through to the buyer. Everybody is benefiting from this.
Absolutely, and as I said earlier, it's about that elastic rope in that tug of war, and
it really makes a big difference, doesn't it, to small businesses? I suppose the people are sitting there thinking, well, this is all very well, so, does he go down to my bank and then does he sort of say, look, we want all this cash? I mean, where does the money come from? Who are your finance providers?
Well, our finance providers are large, trusted institutions. So, as I said, some of them are banks, but most of them are not banks, but they are financial institutions. They might be hedge funds, they might be pension funds or insurance funds, who have large pots of cash that maybe traditionally they would have invested in stocks and shares and other corporate investments. But they're very interested now in looking at ways of getting that cash directly out to end users, particularly SMEs.
And this is what you describe on your website as peer-to-peer, isn't it?
In our case, yes, that's what we call peer-to-peer.
So let's just clarify it, because that's what you call peer-to-peer. A lot of people would be thinking of things like crowdfunding and things like that, which is something that is completely different, really, in many respects.
It is in many respects. In that, what we might call consumer peer-to-peer environment, the individuals who are providing that funding are members of the general public who might go onto a website and offer £1,000 here, £2,000 there, in return for a higher yield than they might get in the bank. And they can then look and say, okay, well, we'll participate in this loan to this small business over 3 years, and they will get their money repaid, they hope, with that interest on top. So that's a very valid part of the market, but it only provides a limited amount of cash. When we're talking about financing cash flow through these very large organisations and through their supply chains, the sorts of numbers we're talking about, and we saw the sorts of numbers on the website earlier, start to add noughts on the end. And it's really unreasonable then to expect the members of public on the street to be lending those sort of sums to support cash flow. But these large hedge funds and
they're quite
insurance,
prepared to do that.
They have that sort of cash. Yes.
What do you think they should be looking for then in the term? I mean, it seems like there are two different types there. There are loans, and then there's this kind of cash flow finance, isn't it? So it seems to be divided into two. So just take us through the loans initially then, and then, which you've kind of done already, but summarise the loans and then take us through the cash flow finance.
Well, I think, as I said earlier, it's important to understand why you need the finance and what it's for. A small business may need to purchase machinery, purchase property or lease property, and for that, typically they would want a loan, and traditionally they would have gone to a bank, and the bank may not, under today's environment, be able to support them. So there are funding solutions. We can call them crowdfunding, peer-to-peer type solutions that are very valid in those scenarios. One thing they need to be careful of, and they need to understand the sort of timescale, because sometimes some of these solutions, you get your loan when enough people have come in and said that they will lend.
And you see that very much in the crowdfunding scenarios, don't you? Where you'll see where we're looking for I gave an example earlier on. There's a company that's looking for a certain amount of money that they want to invest into a particular product that they want to launch. The difference there, though, of course, is that if you're an investor in that kind of crowdfunding, you've got to be prepared to lose the money if it doesn't work out.
Oh yes, you're taking a risk directly against that small business. So if that small business, if that product launch that you described doesn't work out, then it may be that they are unable to repay the loan and the investor won't get their money back. One reason why the authorities in the UK have chosen now to regulate that part of the market, because in the same way as any other investment for an individual, they feel it's important that the providers of those sorts of services are meeting certain rigorous criteria in terms of the way they do business and the way they are assessing the risks and the way they are selling that type of product.
Well, I tell you what, it's interesting the way you're describing it, but obviously it's not money for nothing. And in a few moments what we'll talk about the interest charge and also the terms that come with this, because I think for a multinational right down to an SME who is looking neither for the loan or the cash flow finance, then it seems to be an attractive alternative. Is there a chance or a case that if you have been refused by a bank, you're not, I suppose we've got to be clear, you're not a last chance saloon bar, are you? I mean, you don't come to your business when you've tried everything else. This is an alternative to mainstream financing, isn't it?
Oh, absolutely. And we find that there are SMEs that have a very stable business because we're coming to them via large organisations. They clearly have at least one large customer and they are trading actively, and we always do look at what that trading relationship looks like and how good that trading relationship is. But they may still not be able to get bank finance. In the current environment, the banks, as we said earlier, have become more and more strict in terms of the terms they're looking for.
Cautious.
Absolutely. And
we won't call them strict, we'll call them cautious.
And so some very good, viable businesses are unable to attract the sort of finance that they need through traditional methods. And for them, alternative forms of finance are absolutely perfect.
Well, what we'll do, we'll talk about how much it's going to cost me. We'll talk about that in just a moment, the interest charges and the terms, and also how you go about getting hold of the money as well, for that matter. Listen, it's lovely to have you with us. It is programme number 56. You're watching Business Connections Live. I'm Steve Harlan. Great to have your company. And my guest this evening is Tony Pinn, and he's from Crossflow Payment, and he's the COO, the Chief Operating Officer of said business. And great to have you with us as well tonight. If you are watching us at the moment on our channel, thank you very much indeed. Don't forget, do sign up. And we've got some exciting stuff for the people that are signing up online. In particular, that one particular person, one business each month will get themselves a business video. All you got to do is fill in the appropriate forms on the website, will contact you, and a video that you normally pay something like 800 quid for, we'll actually put one of those together for your business that you can use on your website. And the reason we're so avid or so excited about video when it comes to business, if you think about this, the second largest search engine on the internet is, you've guessed it, YouTube. Lots of people now just go there to find information. Second largest search engine on the internet, YouTube. And the largest, of course, search engine is Google. So really you want to be found. You want your business to be found either in Google or YouTube. Now you'll never guess who owns YouTube. That's right, Google do. So if you've got a great video, then Google's going to see it, it's going to be more favorable to it. So it's a great way to generate traffic, to generate footfall to your website. So if you want to find out more about getting hold of a business video for your website, simply go along to our website, businessconnectionslive.com. It's as simple and as straightforward as that. And also, if you are watching this on YouTube, see, I'm telling you to do too many things at the same time. There is a button just sitting around about here at the moment, and that's our subscribe button. Now, why should you be subscribing? Well, here's a few people to tell you why. If you're a business owner and you need advice on how to make your business more successful, then Business Connections Live TV is just for you.
Our leading industry experts cut out the guesswork for growing businesses. How to use social media, what to expect from your accountant, web design, SEO, and so much more.
Business Connections Live TV is here to give you the motivation you need to succeed.
How you doing? My name is Brad Burton. I'm the motivational speaker that everyone's talking about right now, and I'm on Business Connections Live. What a show! What a show! People, do check it out.
If you're struggling with Facebook and LinkedIn.
Most people that I meet are on LinkedIn. Virtually, there's 14.5 million people just in the UK. I think the figures currently are 238 million people worldwide. But I would say that most of them don't really understand how to use it.
How to present your ideas more effectively.
Hello, I'm Philip Skinner, Shaw Walker Lees. A brilliant way to get message across. I'm actually thinking that we might switch away from our quarterly newsletter to do a video and get it sent through to staff and clients.
To generating leads and finding new business.
Hi, I'm Jim McLaughlin, Managing Director of business development company Axial. And I'd just like to say what a pleasure it's been to have the opportunity to appear on Business Connections Live.
Subscribe and be part of the Business Connections Live TV online community for free.
Business Connections Live TV every Wednesday, 6 p.m. GMT, or catch up on the Business Connections Live TV YouTube channel.
Make certain your business is connected with Business Connections Live TV. You're watching Business Connections Live. It is program number 56. Great to have your company with us tonight. You saw Brad Burton just there a moment or so ago, and he was telling you just how great Business Connections Live is. We've had him on a couple of times in the program, and some very exciting news as well. On Wednesday, the 5th of November, For Networking will have their own live program from this very studio. Now, if you go to the For Networking events across up and down the UK, then make certain you tune in. It's an open forum. We've got all the notice boards going, and you can hashtag Twitter it all in and all the rest of it, and you can actually come, you'll be part of the program. If you want to, you can Skype in your questions, and we're going to be answering business advice, or we're going to be giving business advice live on the program that night. Now, this is going to be a regular monthly event featuring various contributors and also live interaction from you, the viewers. And as I said, the first one's going to be with Brad Burton himself, and that's going to be on Wednesday, the 5th of November. And that's For Networking. And while I was mentioning earlier on about some exciting news coming along, can I do all this together? It's like the news now, isn't it? This is where we're going to be on the 27th and the 28th of November. We're heading up to the business show. You can have a look on my laptop here. It is 170 interactive training sessions led by experts that we're going to be having there. There's the actual website itself. You've got all these different keynote speakers. We're going to be talking to them live from our mobile studio there on the day. And we've got a full studio that's going to be set up in the confines of the show. And we're really looking forward to being there. We went up there last year. We've been to both of them, the one that's at Excel and the one that's been up at Olympia. This is the Olympian show, and as I said, it's going to be the 27th, 28th of November up there at Olympia. It's a fantastic day out. If you're a small to medium scale enterprise and you're looking for, well, if you're looking for some advice on how to start your business, if you're looking for ways to increase your business, to get more footfall to your website, how to use social media, all those kind of things, if that's what you're looking for, if you're looking for good, solid business advice, then you've got to go to the Business Show 2014, and that's at Olympia, London. You're going to be up there? Are you going to pop along?
It sounds exciting. I think we should be there.
Yeah,
Definitely.
it is a fascinating show. It's a great show, actually. And the thing is that you've got a lot of very hungry SMEs there who are looking for that tablet that's going to make everything all right. So it is a cracking show. Let's go back to what we're talking about with you, with Crossflow. And we've talked about the interest and the terms. Well, we haven't, have we? No, we haven't. No. We talked about the. I'm ahead of myself here. What should you know? What should we know in terms of the terms when it comes to interest charge? How much is it going to cost me to actually get this money from you? And how long can I actually be doing it over? You've already mentioned. You've alluded to the fact that it is very much it isn't one size fits all. This is bespoke for each individual business.
It is. We're providing cash flow finance, so the term will always be governed by the invoice or the payment that we're financing. So if you have 90-day terms, if you're being paid in 90 days by your customer, then you can finance that invoice or payment for up to 90 days, generally a little less than that. But obviously you're issuing multiple invoices and you can continue to finance each one up for that period.
Trouble is that when you look at the traditional factoring, whenever I do that, it's costing money, isn't it? And so there must be differing degrees of how much that is actually going to cost.
Of course, you never get anything for nothing.
For nothing, yeah.
Absolutely. Our aim is to make this competitive. We're looking at the overall market. We obviously, and our funding providers, those people that we talked about who are providing that funding, obviously want to make a return. They've got investors themselves who are looking to make a return. But ultimately, from our perspective, it has to be competitive. One of the reasons that we don't charge fees to SMEs for borrowing under our scheme is that we want it to be very clear that you pay for what you get. Mm-hmm. If you don't take finance, you don't pay. And which is why I said earlier that it's important to compare apples and apples.
Like, yeah.
Absolutely. You need to take into account any fees that you might pay through other schemes. Having said that, one of the reasons we're able to charge a very competitive rate is that our commitment to pay, our repayment is coming from that large customer, not from the SME who's effectively borrowing the money. Mm-hmm. Because of that, we can take a view. So if that large customer is a multinational conglomerate, as we said, that's our baseline in terms of who's going to repay us. And we all know that the interest rate you get charged is largely driven by the view of the lender on the likelihood of being repaid. Well, if we have the option of looking at an SME and a large multinational corporation, then obviously the multinational corporation will be viewed as more likely to repay. And that's what we're able to do. So we're providing a very competitive rate, and in some cases rates that are extremely low relative to the rates that an SME would normally pay to a bank or a factor in particular for similar types of finance.
Which way round is it? Is it a proactive thing or is it a passive thing? Do you actually go out there to sell the service, or do people come to you? And if people do come to you, how do they prepare themselves? What are the questions they're asking you? And what's the typical scenario if they're knocking on your door?
Well, I think today a lot of this is proactive from us because it's a case of educating the marketplace. I think not only do SMEs not really understand what options are out there, but a lot of the large corporations still don't really know what options are out there. These types of solutions have been around for a few years now and are becoming more common, so they're getting more understood in the market. And I think as that happens, we are more likely to see what you describe, which is the knock on our door saying, we really want to help our suppliers, can we come and talk to you? But at the moment we're out, we're spreading the word, we're talking to those companies, and we're saying to them, not only can we provide finance, we can do some other things as well, because as I said earlier, ours is a technology-based platform. We also support the general exchange of information between buyers and suppliers, so we make it more efficient for them to do business at the same time. And I think the SME looking at this needs to not be afraid of that. I think historically a lot of SMEs have been approached by their customers and said, oh, we want to trade with you electronically now, we're going to send you orders and we want you to send us an invoice. But in order to do so, you need...
There's a few organisations run kind of gateways like that. They're like third-party gateways, where as a supplier you will go to you will submit your invoice via a third-party gateway service. I mean, some of them as well will actually charge credits so that you have a credit-based system so that you can submit invoices. So it costs you money to invoice.
And that's one of the key reasons why the SMEs particularly have shied away from using these systems. Now, that means that not only are they stuck using paper or at best sort of email type solutions, but the large companies still have to process all of those emails or bits of paper that come through the door. By using modern technology, as we do, we're able to not only support that exchange of information electronically between the large buyer and the large supplier, but also right down to the SME, because we can offer a web-based solution that's very simple to deploy, doesn't cost anything to use. Our views, you mentioned Google earlier. The business model there is very much aligned to the one we take, which is why charge for simply exchanging bits of information? We do that for free. Where we want to take some value is when we're adding value, and that's what the finance is about. So in the same way that Google might use the information that's flowing through its networks, through emails or other things, or the search engine, and will generate revenue from advertising and from all the other added value services, that's what we do. So we're going in and we're saying to organisations, look, we can help you trade electronically with all of your suppliers, no matter how small or big. We'll do it for free. And if we can then add some extra value in the form of the finance, then that's where we'll take some revenue from that.
When you're looking at things like the interest rates that you're charging all these different services and where you are taking your cut, is that percentage worked out on a business by business basis, or do you have a rate that you're never going to drop below, and then the rest of it is negotiable, or are there fixed rates that you have for different size businesses?
We tend to be very variable in our rates, depending on the circumstances. One of the key drivers of the rates, of course, is who's lending the money, so who is providing the finance ultimately that we're using. And we will often use multiple providers of finance within a single program, we call them. And one reason we do that is because we want to ensure that should one provider of finance say, actually, I'm not happy to support this program anymore, that we can then simply slot another one in. So they will all have a slightly different view as to how much they need to achieve. But as I said, because we only earn money if we lend money, if our rates are not competitive,
then people won't come to you.
People won't come to us. And
you'll be looking for another job.
I won't have a business.
All right. I mean, we're coming very close to the end, and in a few moments, going to ask you to really give us a bit of a summary of what we've talked about tonight. I suppose the one thing is that if I'm a small SME and I'm dealing with a multinational, is it worth speaking to my customer to find out if they have their own funding scheme? I mean, is it the kind of thing that the large multinationals will actually be keeping hidden under a bushel, so they won't be telling you, but they'll just be using the services that a company like yours provide to really aid their cash flow? Or is it, and it's not really benefiting me, they're still pushing out the days? Or is it a case of, if ask the question, you'll find out exactly what is going on if you do ask the question? What would you suggest?
It's always worth asking the question. I think that's very important. We certainly see some large organisations that have supply chain finance solutions in place today that maybe are choosing only to offer them to their largest suppliers.
Right. As a bit of a sweetener, nearly.
As a bit of a sweetener, maybe they're using that as a negotiating tool when it comes to pricing and things like that. But why not ask?
Yes.
Alternatively, of course, come to someone like ourselves and ask us and see if we are working with your customer. If we're not today, maybe we can go and have a chat with them and see what's happening and see whether there's an opportunity for us to work with them.
Well, the nice thing is you can find out a load more. I mean, there was a video we were going to show as well that concerning your particular business too that we were going to show. We just haven't had the time to do that, which is a dreadful shame. I'll just go back to the website again. If you want to find out more information about Crossflow Payments, there is an oodle of information sitting online. You can see 1.3 billion pounds, not million, billion sitting up there, invoices and processed. It is a fascinating website to actually go to. You'll find out a lot about the different services. This, by the way, is a great video to watch. It really does explain absolutely everything. If you want to see just the straightforward transaction process, this is it here. You see buyer, what we're actually doing here when it comes to Crossflow, and then you've got the supply here, and you can see the different functions that are taking place, everything from the orders, the invoicing, what can be done, the requests, how to accept payment, how to give payment. It's all happening there. And of course, from the buyer's perspective, the orders going in, the invoices coming out, and also the approved invoices. And I think if you're a small and medium scale enterprise and you've been in the dreadful position where you've been maybe working with some large multinationals, and I don't think they wake up in the morning to actually annoy you. I think they wake up in the morning because they're just doing business. But I think sometimes they forget that the trials and tribulations of running your own business, because a lot of people that you deal with in these large organisations have never had any experience of running a small 1-man, 10-man, 50-man outfit. What they know is the corporate world. They go on holiday, they still get paid. They don't have to worry about cash flow. Whereas with your business, you've got to make certain that the money is going to be there next month, the month after, and the month after that. I was talking before we started with Tony, and we both agreed, you're putting a business plan together and you start your VAT at the wrong time in the cycle, and that can have a big impact on your cash flow. And that's why organisations like Crossflow are going to be there to maybe help your organisation. I'm going to ask you now, if you don't mind, to look straight down. Would it be this one here, this camera number 1, I would imagine? If you look straight down camera number 1, and just remind us of the key takeaways that we've got from this evening as well, and to just make absolutely certain that we know why we should be talking to you, why we should be finding out what your organisation does, and why we should be asking maybe some of our customers, are they dealing with you? And if they're not, why not? Which I think is really important. So straight down number 1, just take a bit of a breath and away you go.
Well, we've talked a lot this evening about Crossflow Payments, the situation we're in and the market we're in. Crossflow Payments offers an innovative technology solution to support business-to-business processing of invoices, orders, and most importantly is using alternative sources of funding to introduce additional capital into the economy at a time when SMEs are looking for support to help them transact business with their customers at a time when the economy is growing. If you're looking for additional finance, then look at some of the alternatives out there. Be it a term loan, be it cash flow financing, there are alternatives out there. Crossflow Payments is working with a large number of large organisations to support their customers, their suppliers. That might be you, and we might be able to help you. As you've already heard, there's a lot more information on our website at crossflowpayments.co.uk. Come and talk to us, or as we've already said, go and talk to your customers and see if they're using us, because that might help you continue to do more and more business with them.
Fantastic. Excellent. Tony Pinn there, the COO of Crossflow Payments, talking about supply chain financing services through peer-to-peer financing. I mean, it was a fascinating evening. If the whole world is a little bit gobbledygook and you think to yourself, I think I kind of get what they're talking about. Honestly, please do go to the website, crossflowpayments.co.uk, and you'll find a whole host of information there. Also, there's a lovely piece as well that where you're doing a speech to a collected room of
Yes.
very, very clever people. There's the website, and there's the video down there. If you go to that, there's a whole playlist. There's 4 videos there that you can actually watch. But do go to the website. Once again, there's what you're looking for. Crossflow Payments, £1.3 billion. You don't have to see that number on Business Connections Live, I can promise you that. So now, if you found tonight's programme interesting and fascinating, that's fantastic. Don't forget, go to the YouTube site. Do subscribe as well while you're on that particular site. Go to our home site at businessconnectionslive.com. We'd love to see you there. We're redesigning the site at the moment. We'd be very interested in your feedback on that. And if you'd like a programme like this for your business, maybe instead of sending out that newsletter to your customer, you'd like a program where you can sit down maybe with the experts that are in your business, and we'll do an interview with them, we'll talk to them, we'll do it in this environment, we'll get a couple of guests in. We can make a program just like this for your organisation or for your business. Once again, if you want more details of that, you can go to our website at businessconnectionslive.com, or you can give us a call on 01784 256 777. Let's just see how quick they are at getting the number up. Not that quick enough. Go on, blimey, mate. If you do want it, just go to the website, all the contacts and all the details. And there's the number. I thank you very much indeed. Just give us a call. Ask for Steve or ask for Linda. Our guest on next week's programme is Michelle Turner-Davison on women entrepreneurs in business and being successful around juggling family and other commitments. So that's going to be on next week's programme. Don't forget as well what I said about the 4 networking programme. That kicks off on the 5th of November. 4 networking, their own live show here on Business Connections Live, and this is going to be a regular monthly thing. And that pretty much wraps it up. I tell you what, let's do it all again next Wednesday. We're going to be live once again next week, as I said, with Michelle Turner-Davison on women entrepreneurs in business and being successful around juggling family and other commitments. From myself, Steve Highland, and Tony Pinn, thank you very much indeed. Till next week, have a great week. Bye for now. Bye-bye.